Hi everyone, thank you for the opportunity to present Continental Gold. As was just mentioned, we are a Colombian-focused company. I know for some of you the word Colombia seems scary, and I don't blame you. We have television shows like from Netflix, Narcos, highlighting things from the 1980s and 90s in Colombia where it was a very difficult place to operate from a security perspective. However, the country has gone through enormous change since 2002. The former president came in, he cleaned up the security situation, things have improved 98%, it's not 100%, but importantly, the president of the country is now publicly saying that the last major group causing problems in the country is about to sign a peace accord with the country in the spring of 2016. And from that point, we're going to see a country that really takes off as far as growth. Most of you would not realize this, but Colombia is the richest historical producer of precious metals in Latin American history. In fact, the fabled lost city of gold, or El Dorado as they call it in Spanish, is supposedly located about 2 hours south of the capital city, Bogota. Maybe we have found it, I'm not quite sure, but we're on the right track anyways. And this is a country that, because of the security, there was no exploration happening in the 1980s, 90s, and 2000 to 2005. And the potential of Colombia is enormous. The Andes mountain chain continues. The same types of deposits that we see in Chile, Peru, Ecuador, Argentina are going to be found in Colombia, and we are at the beginning of a renaissance, particularly for gold mining. With that said, I do want to highlight this. Colombia already has a large, well-established mining industry. It's just dominated by coal and nickel. The largest mining companies in the world operate successfully in Colombia, including Anglo American, BHP, Glencore, close to home, Drummond, etc. The largest open pit coal mine on the planet is in Colombia. It's called Cerrejón. Gold, on the other hand, is quite small. You know, the total gold production of the country is about 2 million ounces per year, of which 300,000, only 300,000, is produced by mechanized means. There are 2 mines at around 100,000 ounces per year, and then there's a bunch of smaller mines that make up the last 100,000 ounces. Our project is called Veronica, which I'm going to show you in a second, is very important for the country because we will double the size of mechanized gold production in Colombia when we go into production in 2018. We will take that mechanized production from 300,000 ounces per year to 600,000 ounces per year. Now let's get into the project and talk about some of the highlights. So we are a very rare combination of size and grade. For those of you that follow the gold industry closely, know that we had peak discovery in 1996 for this industry, and since that point it's been a struggle to find ounces at any kind of grade. Part of the problems that have plagued the industry from 2002 to 11 was the desperation to put gold into production and therefore focusing on projects that were too low grade to really ever make economics. Too many of those went to production, and fortunately, really highlighting some of the things Eric was saying, reflective of the cycle turning, a lot of those have shut down now or are on fumes and on their way out. Our project, Veronica, is almost at 10 million ounces of gold at over 10 grams per ton. Half of that is in what we call the measured and indicated category, which are the higher confidence categories. The balance is in the inferred. And I can tell you with confidence that at 10 million ounces, we will grow much larger than that. Our drilling has indicated we have potential for 15 or even 20 million ounces at our 2 deposits. However, economy of scale at this point makes more sense to stop focusing on growing and start focusing on trying to build the project. We currently trade at a steep discount compared to our peer group on a price to NAV basis. We'll come to that. We have, as a company, 2 major milestones that we have to accomplish between now and the summer of 2016. The first one that will happen is the feasibility study. We will be releasing a feasibility study in about March of 2016. Feasibility will outline a project that will produce in the neighborhood of 300,000 ounces per year, as I mentioned, and more importantly, it will outline a project that will produce in the lowest quartile of the cost curve on the planet. Okay, so it will be a high margin operation without question. The second piece that we need to deliver will be in the summer, will be the completion of environmental permitting. For those of you that are shareholders or have been following us, we made a decision in September to withdraw our environmental application at the state level environmental agency and reapply at the national level. There was a very good reason for this. Number one, no major infrastructure project in Colombia, mining, oil, gas, roads, ports, or anything is permitted at the state level. State level agencies do not have the sophistication or the capacity for large-scale mining. Number two, we were made a strategic project of national interest by the President of Colombia, and the laws covering that strategic project initiative were put in place in June of this year. In a nutshell, there are 60 projects covering infrastructure from roads, ports, oil, mining, and those projects need to be governed at the national level. Every one of those projects, when it applies for a permit, which is in our case, will be done so on a priority basis, and the permit will be evaluated on an expedited basis. People say to me, you're only applying for your national environmental permit in January. How do you expect to be completed that by the summertime? Well, there's already precedent. A large hydroelectric project just went through this same thing. It's a strategic project, and their permit took just over 90 days to complete from the date they filed. So why are these projects so important to the country, and why are they done in an expedited manner? Because there's going to be peace with FARC, the rebel group that I mentioned, coming in the spring, the last holdout. And that's going to be a wonderful event, no question, but what does that mean for the government? It means they need billions of dollars in additional tax-based revenue to go and put infrastructure into access these very rural communities in the south of the country that have been cut off, from the civilization during this long conflict period. And as a consequence, these 60 projects will be pushed through very quickly. Let me move on. Okay, there's our metrics. We have 129 million shares outstanding. Our symbol is CNL on the TSX, and our current cash balance is $34 million. We have enough money to take us into the first half of 2017. More importantly, this is more than enough money to get us through feasibility and permitting, at which point we will then go to look to raise the project financing money starting sometime in the summer of 2016. One point I made yesterday in Zurich, and I want to make again today, we may have a bear market in shares in gold mining, but there is a significant bull market in project lending and financing. In 2013, on the back of the collapse in the gold mining stocks, tens upon tens of billions of dollars were raised by private equity funds around the world, earmarked for mining because longer-term money sees how cheap it is. The problem has been for these groups is that there's very few projects for them to fund. So there is far too many billions of dollars available as we speak right now for too few projects. And as a result, the once-in-a-decade scenario has come true for people like me, standing up here with companies where we go to raise money to build a project in debt, and there's an extremely competitive process with groups trying to outbid each other to give you money. We've seen recent deals. We saw Pretium, we saw TMAC, and others of the like for those that follow the space. And what we see is new types of structures coming out, and people that were just conventional private equity guys saying, well, actually, we'll buy equity, we'll do royalties, we'll do streams. I mean, they're getting more creative as it moves forward to try and deploy their money, because as everyone here knows, private equity money, generally people invest. It's usually pension funds in those private equity funds, and they're given 5 years to deploy the money. Well, this money's now in the third year, and there's billions, and it's getting tight, and people are going to lose their funds and need to return the money to the investors unless they deploy it. So that's a good position to be in. Okay, I won't spend much time on management due to lack of time. The only thing I do want to say is this: one of the other products of a long bear market has we've been able to upgrade our management team. Right, good, very good people are available. Okay, and what we have done is we've plucked what I would say are the crown jewels from Cerrejón coal mines, which is the best operation in Colombia. It's the largest open pit coal mine on the planet Earth. It's owned by Anglo, BHP, and Glencore. But importantly, in Colombia, it is the leader in environmental and CSR management. And as a consequence, we're going to be the first large-scale gold mine. We want to match that success. So we've hired Leon Teicher, executive chairman. He was the CEO of Cerrejón Coal. which has over 15,000 employees from 2006 to 2011. Our mine builder is not Colombian and Don Gray, but some of you may be familiar with him. He is directly responsible for building Tahoe's Escobal mine in Guatemala, which successfully commissioned as a mine in 2014. Board of Directors has a good representation of all the pieces that we need, from engineers, geologists to strong business people. We can leave that for another time. Okay, Arboreta Project, it's in an area of excellent infrastructure. We're 2 hours from Medellin on the Pan American Highway, meaning it's completely paved right to the project, which is excellent. It's got power, it's got available water. This is Colombia, not Chile, and importantly, it has a labor force. The Veronica town, which is about 6,000 people, which is located about 1 kilometer away from the project itself, is a mining town. It just celebrated its 400-year anniversary. And although I would like to get up here and say that we were responsible for discovering Veronica, we were only responsible for discovering it in modern times. There's literature at Veronica dating back to 1492 it's in our possession of, really from Spain, of people coming back and calling Veronica the mountain of gold in Colombia, and rags to riches type story. So it's not something new. However, we were the first to ever explore it with drills and with modern technology, and the result speaks for itself. Okay. So I talked about high grade. I hope everyone can see this table. It might be a little small. I'll summarize it as I mentioned earlier, about 10 million ounces of gold in total. But there's a more important point here. If you look at our measured grade, which is about 20 grams per ton, measured being the highest confidence category, that is significantly higher than our indicated at around 11 grams per ton, which in turn is higher than our inferred grade at 9 grams per ton. Okay, from the beginning of this project, we have seen as sample density increases, so confidence in resource estimate increases, grade does rise in tandem. And I can take that one step further for you. The project, when we bought it in late 2008, came as a small-scale operating mine. So we have been operating in a pilot plant, let's call it. We produce about 5,000 ounces per year, so it's not major in that regard. But importantly, the 23-year history of production, which you see the last 3 years of production in the table on the bottom of the image, the grades match the measured grade. So we were able to reconcile small-scale production, with the measured grade, and we do expect that when we get into production, we will see grades rise out of the production itself versus our ability to ever estimate it. The reason our estimation is like this is really simple. We have conservative groups that do our resource estimation, and they prevent the influence of grade, high grade, from smearing very far from a drill hole when we're in the inferred category or lower type categories. Okay, this is the picture, for the most part, at least, of North American listed companies. I apologize on the table on the right, they're by symbol, not by name, due to lack of space. Half of these are financed, the other are not. You could see where we're trading on a price to NAV basis. I mentioned we're extremely cheap, right? Really a direct result of our change in permitting strategy. A lot of people misinterpreted that there's a complication in permitting in Colombia. That is not the case at all. There's been many mines permitted. In fact, our current Colombian management team has done variations of permitting at the national government level over 15 times in the last 10 years. So we're going to get permitted, but this is the result of a change in strategy, which ultimately resulted in a delay. We will be complete permitting, as I mentioned, in the summer of 2016. Wonderful opportunity, I think, and for what it's worth, I have been buying shares in the market in the last 2 weeks and will continue to do so while we finish tax loss selling season, which will end in mid-December. Okay, what is Veronica? So you're looking at a large gray blob on the screen. That gray blob represents somewhere deep down in the earth we have what we call an intrusion, and we have vein systems that are coming off of this intrusion. Okay, we have a fancy style of vein system deposit, which we call a CBM deposit. It's a horrible name because it stands for carbonate base metal vein system, but in fact these systems are generally gold-silver with a small base metal overprint. The characteristic that matters most to everyone in the audience with this type of system is that they get large because they have an enormous vertical extent. In fact, as far as we know, our project, our two deposits are Eroica Veta Sur, which you see in bold there. We have drilled both of those deposits down to 1.8 kilometers depth, and we are still open. That is the deepest known CBM, at least to our knowledge. And saying these systems get large, examples that you might be familiar with globally, Barrick and Zijin Mining's Porgera mine in Papua New Guinea is 30+ million ounces. It is the exact same setting as this. And more recently, Goldcorp's flagship asset in Mexico called Penasquito is also this exact setting. In fact, I recently saw a drill core from Goldcorp and thought, my God, I could put our drill core into their trays and nobody would know the difference. It really looks identical. And you can see, obviously, we're onto something big too. Due to lack of time, I'm going to be very brief, but the image on the top left here really tells the story of Veronica. I mentioned we drilled down 1.8 kilometers, and I'm sure some of you said, well, my God, how are you going to access 1.8 kilometers deep in the earth? Because that's a long way down, and we're not going to build a South African-style mine that's been going for hundreds of years. But the answer is simple. We're drilling into a mountain slope, as you can see there. I'm showing you what the Eroica and Veta Sur deposits look like inside the hill, which is the circle in black, and you see those two gold blobs. So although we've drilled 1.8 kilometers, you can see a teal blue line, which says Hagabra Tunnel. That is development that we've already put in, and that is going to be the main haulage line for all gold-bearing rock to come out into a central processing facility, which you can see in that valley. Importantly, above the elevation of that tunnel, both deposits have about 800 meters sitting above. That's going to be a huge advantage for us, in that gravity will be our friend for the top 800 meters of both deposits, instead of most mines where it is your enemy. So what does that actually imply? Two things. One, it means that we'll be able to use ore chutes to allow rock to just fall down naturally with gravity instead of having to truck it. But more importantly is water management. As everyone knows, there's always water in underground mines, and when you're fighting gravity, you spend money pumping water out. In this case, water will flow naturally, and for the top 800 meters of mining, it becomes a moot point. 100% of our measured and indicated resources, so about 5 million ounces, which our feasibility study will be based on, is situated at or above the elevation of that tunnel. So what we will be mining for the first 10+ years will be sitting in high elevations and will enjoy the gravity-assisted scenario. The last point I'm going to make, due to lack of time, is I've already mentioned we have grade and we have gravity, but the last piece of the puzzle for a high-quality mine is metallurgy, or the ability to separate the gold from the other minerals and rocks. That can kill a project. It doesn't matter what the grade is. If it's refractory, meaning you have to chemically throw chemicals at the rock to separate the gold from other metals where it's encapsulated in a circle, that costs a lot of money and becomes complicated. Our project is what we call a free gold environment, meaning from simply crushing and gravity, we will be able to liberate well over 90% of the gold, and the flow sheet to produce what we call gold doré will be relatively simple and low cost. So what does this mean? We're going to build this mine. It's going to cost somewhere between $350 and $400 million. We will start production somewhere around 2,500 tons per day and ramp up to 3,000 tons per day in time. And this will spit out about 300,000 ounces, give or take, per annum in the lowest quartile of costs. I thank you for your time. Time's up, I understand.
It's going to need 5 minutes.
Oh, okay, good. Sorry, we can continue to talk. I'll keep going and show you just one more slide, which I want to show you. Oops, I passed it, I believe. Okay, you saw the hillside. I mentioned earlier that we operate a small mine at the Eroica Deposit. I didn't mention that part, but it's at the Eroica Deposit. The green line represents the mountain slope, and all of those white lines going into the hillside, that is the small-scale development that we have in place that's been put in place since 1992 and continues to this date to produce roughly 5,000 ounces per year. Obviously, nobody here cares about 5,000 ounces of production, but the information that this generates should give everyone all the confidence they need that this mine will be successful. What does it teach us? It teaches us that what we call the continuity of veins, both visually and gold, is robust. Visually meaning that we can walk those levels, anyone can come, look up at the ceiling of the tunnel, and you will see the vein with your eyes, remarkably straight and continuous for up to over half a kilometer into the hillside in this image. In addition, we're able to channel sample across the width of the roof systematically every 2 meters and composite the grade, and what we come out with is robust continuity of grade. We see it's not like we have high grade in one spot, zero grade, high grade, zero grade. It has really good continuity, and all of those crazy numbers of colored dots represent different grade ranges you can see in the legend on the bottom left. And what you will take away is you don't see very many green dots. Green dots are gold grades between 1 and 3 grams, which is below cutoff grade for us and what we will be mining. We'll be mining above 3 gram per ton cutoff underground. So that should give you the confidence. We have a small mine, all of the information is there, and we're really just going to enlarge this significantly from 30 tons per day to 2,400 tons per day. I thank you for your time, and I'm available for feedback if anyone has it.